Gold prices have surpassed $4,000. They have reached as high as $4,060. Silver prices have also reached a historic record level. After many years, it's back at the $50 level. As you know, for months we've been telling you that a rapid rise in silver could be observed. It has reached $50. So, will it stay here? No, my friends. According to our calculations, especially those based on inflation, silver has the potential to go as high as $140, even $150. Where is the ounce of gold headed? It's racing towards $6,000, my friends. In fact, Goldman Sachs had already raised its target to as high as $4,300. Now, they've moved it up to the $4,900 level, but it doesn't look like it's going to stop at either $4,900 or $5,000. It's moving steadily towards $6,000, and IMF President Georgieva also said, in the coming period, uncertainty will be at the forefront in the economy. So, friends, uncertainty, geopolitical risks, countries' demand for gold, and the increasing amount of money in the market for various reasons will continue to push gold and silver prices upward. We will see silver go above $100. And for gold, our first target will very likely be the $6,000 level per ounce. In Turkey, the price of gold per gram is steadily heading towards 12,000 lira. We will talk about all of this and evaluate the numbers. One of the main reasons for gold's rise is that expectations for a Fed interest rate cut are increasing day by day. Of course, the fact that the American government has shut down and still hasn't reopened has pushed gold prices above $4,000. But even when the American government reopens, we won't see a pullback in gold prices. We might see a correction, but gold prices will continue to rise at full speed. I will share the reasons with you in a moment. Aside from the government shutdown, one of the most important reasons is, of course, the Fed's interest rate cuts, friends. As of September, they implemented an interest rate cut. There was a 25 basis point rate cut. Now, the report also included statements that there could be further rate cuts in October and December. The report says that we may support interest rate cuts in the upcoming period as well. This means that even the conservatives are indicating that they could implement 2 more 25 basis point rate cuts this year. On the other hand, Trump's appointees placed within the Fed, like Mirren, are saying that there should be sharper and faster rate cuts. These sharp rate cuts are unlikely to happen before May, friends. There will be calmer, more gradual rate cuts. However, especially with the change in the structure of the Fed, the increase in members supporting Trump, and the appointment of a Fed chair who supports Trump, we will be faced with much more aggressive scenarios for rate cuts. In fact, the expectation of those aggressive rate cuts has already started to push gold upward rapidly. I had told you this before. We had said that 3,500 was a critical level. We had said that this level would be broken, even if with difficulty. We had also said that once it was broken, the rise would accelerate. And that's exactly what we're experiencing these days. When we said no one should be surprised if it goes above $4,000, my friend, people laughed at us. Well, as of today, we're above $4,000. So, what will happen next? Most likely, with these news and expectations coming from the Fed, it will hover around the $4,000 to $4,500 levels for a while. After that, 4,500 will be broken and gold will quickly run towards 5,000. Once 5,000 is broken, it will start pointing to the 6,000 levels for gold. So why does gold keep rising without stopping? Yes, one of the reasons is the expectation of a Fed rate cut. But that's not the only reason, friends. Especially central banks' demand for gold is increasing. Let me give you another very interesting piece of information. Look, China's foreign exchange reserves have reached one of the highest levels in its history. Foreign exchange reserves are at their highest level since 2015. You might ask, what does foreign exchange reserves have to do with gold? China is one of the countries with the highest demand for gold, and it leads the group of countries that are trying to distance themselves from the dollar as much as possible and increase their gold reserves. This shows us the following. If China's foreign exchange reserves have increased and reached these levels, it will use those reserves to buy gold. Therefore, this will also affect gold prices. Gold prices will continue to rise. It's not just China. Countries like Russia, India, and Turkey will also increase their demand for gold. And it won't stop there. America will also increase its demand for gold. In fact, we know that the gold reserves within the Fed have surpassed $1 trillion. All of this clearly shows us the demand for gold from central banks. As long as central banks continue to demand gold, gold prices will keep rising. Are central banks the only ones demanding gold? Of course not, friends. In addition, ETFs are demanding gold, large funds are demanding gold, individuals are demanding gold, and so are countries and companies. By countries, I don't just mean central banks. Other entities within countries have also started to hedge themselves with gold. All of this increases the demand for gold, and gold is rising rapidly. Of course, along with gold, silver is also rising. But when it comes to silver, there's an important semicolon. There's an explanation, and I want to share it with you as well. In the upcoming period, with the decrease in interest rates, we will start to see significant activity in industry, production, exports, imports, and foreign trade. And all of this will lead to a greater inclination towards silver than gold. The supply of silver will not be able to meet the demand. Actually, it already can't, and it will become even less able to do so. At the same time, since silver has more room to grow compared to gold, it will rise more, faster, and in a more aggressive manner than gold. That's why we are pointing to the $140 and $150 levels. In short, friends, we have entered a period where we will see significant movements in gold, silver, and other precious metals. I get questions like this. It has reached $4,000. It has risen a lot. Should gold be bought at this point? I'm not going to tell you whether you should or shouldn't buy gold at this point, friends, but I can say this. There is no reason not to buy gold. There is no reason to sell gold either. But there are dozens of reasons to buy gold. We can see the demand. Another point, aside from the Fed's interest rate cuts and the gold demand from both central banks and other institutions, is this. Geopolitical risks around the world continue to increase. Even though action has been taken regarding Gaza, and even though it seems like there are winds of peace blowing between Israel and Palestine, the world is not just about Gaza, Palestine, and Israel, my friends. At the same time, the Russia-Ukraine issue is still on the table. The tension between Trump and Putin is increasing day by day. Risks are increasing in the Asian region, especially on the Chinese side. The tensions between China and America are not only economic, but are also escalating due to other geopolitical risks. All of these factors together are increasing uncertainties. Just as IMF President Georgieva said, the rise in these uncertainties is also pushing gold prices higher. People who are concerned about the dollar, the euro, or other currencies, whether in certain regions or countries, continue to turn to gold, a safe haven that they can carry with them anywhere and easily convert into cash. This is another reason driving up gold prices. Of course, it also appears as another factor pushing up silver prices. So what is the summary of what we've discussed, friends? Gold prices will continue to rise. No matter what anyone says, gold's ounce is steadily heading towards $6,000. Today it's Goldman saying this. Tomorrow it will be Citi. And we'll see similar statements from other banks as well. Only Bank of America said that gold has reached risky levels. But after they said that, gold prices rose another $200 or $300. I think BofA will have to review their reports again. As far as I can see, if you ask what will happen on the stock side, yes, we see that especially technology stocks in America have appreciated significantly, and even that a bubble effect has formed. However, on the other hand, news keeps coming in one after another. Let's not forget that the value of ChatGPT and OpenAI has reached $500 billion. A new strategic agreement was made between AMD and OpenAI, and with both agreements, the stocks gained more than 38% in value. Yes, there is a risk here, but just as I mentioned with gold, as far as I can see, the acceleration of the Fed's interest rate cut process will continue to push technology stocks upward in the US. In addition, since the Fed's interest rate cuts will make industry and the banking system more profitable and accelerate their growth, even though this creates inflationary pressure and poses significant risks in the medium and long term, in the near term, especially around May 2026, we will see the upward trend in both American and European stocks continue to accelerate. Because there is an abundance of money. Now let's add something more to this abundance of money. For example, one of these is that Iran announced it has discovered $300 billion worth of natural gas reserves. This $300 billion will also be looking for somewhere to go. You might ask, will they immediately earn $300 billion from natural gas? Of course not. This will be earned over time, but the money coming from there will definitely be put to use somewhere. On the other hand, countries like India and Russia are also increasing this type of production. There is also money coming from these places. These will also enter the market and will have an impact somewhere as well. So on the stock side as well as the gold side, there are a lot of factors that will support the rise. 2026 will be quite eventful. In my opinion, we will see significant volatility in the markets in 2026, especially starting from March-April. Why March-April? Because expectations for May will start to form. Trump's people will start to become more influential within the Fed, and expectations for interest rate cuts will rise even further. All of this combined will accelerate the upward trend in gold prices and stock prices, friends. Let's also take a quick look at the numbers if you like. The dollar is trading at 41.72, the euro at 48.60, and the pound sterling at 55.91 lira. The parity is at 116.93, and the dollar index is at 99.12. Look, they're trying to pull the parity back as much as possible, but this is as far as it goes. Distrust in the dollar continues to increase, especially due to Trump's policies. Yes, we've come to the end of this video as well. We'll be together again in the next video. Until we meet again, take care, stay happy, and look after yourselves. Don't forget to like, share, and subscribe. Friends, I'm definitely looking forward to your comments as well. On the other hand, you can support our channel by clicking the join button, or you can support us with super stickers. Take care, stay happy, look after yourselves. Bye-bye.